Welcome to the weekly swing low. It's August 26, 2025. It's a Tuesday right before the market opens. It's not often I'll be able to record on right before the market opens, but it's a Tuesday. And yesterday we just had an inside day, a small red inside day. And just zooming out here, we're starting with SPY on this weekly chart. Just remembering, this is week 20 of this weekly cycle rally. So we've been rallying for essentially 20 weeks. Again, it is an inside week, right? Because we're below the all-time high that was set last week. But we are late in a weekly cycle. To rally for 20 weeks is already pretty long. And so we should get the weekly cycle decline at any point here. That doesn't mean that's something that you actually just try to anticipate. It's something that you react to. Now, zooming into the daily chart, it is day 6, or yesterday was day 16, I should say, Tuesday. As I said, it was a red day. Let's really zoom in here. So Friday was a big green day because of the Jackson Hole speech. People interpreted that as the Fed is going to cut. Market interpreted that bullishly. Look at this huge green day. And what is it also? Hopefully this is clear to you now, these things, right? So it was a swing low. It was a daily swing low on Friday, because this is the candle that marked the low. That was from Wednesday. By crossing above that candle at $639.66, we formed a daily swing low. So, said a different way, this downtrend here, like after this swing high, right? Actually, this is your high here, right? Is that right? 646, 609, 640, 619. Yeah, so technically your swing high happened here. Right, and that's important. These details are very important. Once price crossed below the low of this candle, which happened on this Tuesday, that was your swing high. Then you got follow through the next day, but then it bounced. Then you had some consolidation on Thursday. Then you had your resolution on Friday. Now we're just inside the range of this big Friday green candle. And it's a big range because it's a big candle. So that's a low of $637.25 and a high of $646.50. So unfortunately, everything inside that is just noise, right? It's just price discovery after making this new high. But a few really important things to note. Remember, this really long rally. So zooming back out from here, this rally that started basically call it the end of May, late May, that went all the way to the end of July, and then we had this really sharp downdraft, which created a gap, right, and also created a swing high. So that swing high became active below $630.77. So this candle here that we're hovering over, notice what happened, right? We flushed, right? We had a gap down, and then we started to recover. We had this V recovery. Notice what happened when price had its first pullback. So notice this rally here, right? This rally, this is the first pullback of this rally. Where did we reverse? Right above this swing high, right? Like that's very bullish. Price didn't even get back to this level, right? Like that level was important, right? Because that is the level that marked the swing high, and it was even a gap. And you can see, as we talked about in previous video, price reacted around that level, right? Like you have this wick, we broke down below it, and then we recovered it. This time, we didn't even break down, we didn't even touch the level, right? Like we were able to stay above it. So that becomes an important signal, right? Another way of saying that is this is a higher low, right, than this. This is a nice little uptrend. And so it's Tuesday. We want to see some resolution. I suspect we get something like this, right, to sort of resolve it. Now, the catch is we're late in the weekly cycle, so I don't think we're going to rally for, I think we rally this week. I think we make a new high, but you have to be nimble. And I think the opportunity is actually in small caps, which we're going to get to. So day 16, and just beautiful, clean monthly chart this week, right? All right, so we're moving on to QQQ, and we'll go through the other tickers. So QQQ, same thing, like just different, different levels. I mean, look at yesterday was even crazier, just like an ugly doji. Also important to note, QQQ is actually still below the 10-day moving average. So that's really interesting. Also, this low here, much closer to this low versus SPY. Like, look at that. Look at the distance. This is a clear higher low versus this. This is also a higher low. This is higher. This low is higher than this one, but not by much. And also, interestingly, is that a gap fill? Let's see. Yeah. So it's kind of look at that. Like basically to the tick, right? Like this price rebounded right at the high of this candle, which basically forms the boundary of a gap from here to here. Like it's not these things aren't a coincidence. It doesn't mean that like you will always get exactly that same reaction, but you have to be aware of those prices. So this is just a doji from yesterday. So the range from yesterday is a high of $573.29 and a low of $569.16. So that basically gives you a range you can play with within here because price is going to open inside this range probably, right? Like something like this, right? And you want and then it's a question of which side of the range is it going to break. I suspect it will break to the upside, but we'll have to watch and we'll see signs on the lower time frame of that happening. On the weekly, same picture as SPY. It's week 20. The catch here is that the high for QQQ was 2 weeks ago, and we are actually below the swing high levels still, actually, right? So that's important to note, right? So right now, as long as price stays below $571.57 for QQQ, we actually have a weekly swing high in place. The catch is if we break above that, right? Like it cuts both ways. If we can break above $571.57, that is a very bullish sign and an actionable trade, like a sort of a buy stop sort of thing. Because I do think this thing has another all-time high in it before we get the weekly cycle decline. And part of that is because of what we're seeing with QQQ. But it is also important to note that the ratio of QQQ to SPY is down, right? Or I should say, it it is a swing high right now, right? Like it closed as a swing high last week. Like look at that, all right? You can see that the absolute chart for QQQ is, or as I said, we already are a swing high for the absolute chart, but in this case, for the ratio chart, you have a pretty big, deep red candle here, and as we talked about, these peaks mark market peak. These other swing highs on this ratio chart marked other peaks in the market. So all signs again. You add to that the fact that we're on week 20. If anything, the market may have another week or two of upside, but you want to be nimble and be careful, get out of the way for that downside. For the Dow, what is the Dow looking like? So Dow inside day, similar to all the other indices. So the range from yesterday is the high of $456.19 and a low of $453.03. That's the ETF DIA, and that is actually outperforming. It has a little weekly. It started a little weekly uptrend versus SPY. That is usually what you see in a correction, though. You see the Dow outperforming. Now, moving on to IWM. Now, this one is actually starting to wake up. We'll actually look at the ratio of IWM to SPY first. First off, this thing has been in a downtrend basically since it topped out back in 2008, right? Like you can see here, this is a long-term chart, monthly chart of the ratio of IWM to SPY, and it rallied since the 2000s from basically May 2000 to March 2006. So essentially 6 years, right? 6 years of an uptrend. You did have this really nasty move down here, and this is a ratio chart. So I imagine, this was a market kind of meltdown in general. But you had this massive uptrend, and then this really you had this big spike up as well during the like right before the crisis, but you had this really long period of just going sideways, right, for many, many years. And then you started this elevator down period. Within this elevator down period, there is this period where we rallied. Look at these gigantic candles. This is 1, 2, 3, 4, 5 months of price action, which it sticks out like a sore thumb. Within this gigantic downtrend, you have this 5 months. It's like, oh wow, we're back, we're back. No, we're not. We go on to make lower lows. What if we're getting one of those periods right now, right? Like we don't even have to break out to like new all-time highs to be clear, but we could have something like this, right? Like I think that's we may have just started something like that. And we're going to get a weekly cycle decline to be clear, and you want to be careful, don't get caught in that. But after that, like this is about patience, and IWM might be the thing to ride. And I'll say, just specifically, if you want to really catch the lightning, if you will, TNA is the thing to play. That's a leveraged ETF on the IWM. But this thing looks like it made a long-term low back in April, right? This is the ratio of IWM to SPY. And so it's a question of what kind of rally do we get? Do we get something like this where, IWM makes great absolute and relative gains? So moving to the actual IWM chart, it's the same picture though, where, week 20, we've rallied, we're week 20 of the rally. On the daily chart, the range yesterday was a low of $232.36 and a high of $234.30. So that's the range. This thing looks like it's opening up. It's been moving up overnight, which is positive. The other thing I will note, the most important thing, look at this monthly chart. We have not made a new all-time high yet. So that is about $10 away, right? So not huge upside, but that tells me that's going to act as a magnet. This thing probably makes a new all-time high before the weekly cycle decline begins. And that means the rest of the market probably rallies along with it, would be my guess. But this is where you kind of play that. And for TNA, it's a leveraged ETF, remember, so it's not necessarily getting back to 110. But I would play, you play for like this peak here, right? And this is a 3x. So that $10 is like probably, what is that, like a 5% move? So yeah, this is like maybe 15%. So that's IWM would be the thing to ride. Again, be patient. Remember that we're close to a weekly cycle decline beginning any moment now. So just be mindful. All right, moving on to SMH. So SMH, yesterday's range was a high of $295.79 and a low of $292.12. And this thing is starting to outperform SPY. That's important, the ratio. Just a little swing low on the daily. What about Dixie? So Dixie is on what appears to be week 19. It's really just been moving sideways the last 8 weeks after this little swing low on the weekly chart. As long as it stayed above 97.42, like just moving sideways, not really doing much on either end. And on the long-term chart, this would appear to be month 24 off of this high here on month 18. So this appears to be a bit of a bear flag pattern that's building out. We'll see if that we'll know if that is what plays out in the fullness of time. The 10-year Treasury yield also consolidating week 21 after this top on week 7, which is really just a double top off of this high that happened literally on week 1. All that to say, not really going anywhere. We're just in a kind of a gigantic range. And on the daily chart, it looks like about day 15 of a new daily cycle. We are technically, if we stay below 4.29, we have a daily swing high in place. So that'll be an important level to watch, an important pivot point. But just long term, we're not really going anywhere. Like we're just kind of consolidating in a range. Oil. So oil, the only saving grace for this one is that it is week 19, so it's late in the weekly cycle, and it's been declining, right? Whereas SPY has been rising, and so that's the only kind of reprieve. At some point, it'll get a bounce. We do have a little green candle from last week. It's trying to hold a low here. That low is $61.45. It's a very clear line in the sand for that's WTI US crude oil. What about TLT? So doing a similar thing to rates. It's just consolidating here on this weekly chart. We do have a little swing high in place on the weekly as long as price stays below $86.92. So that becomes an actionable level. A break above that tells you this is going higher. And you would expect with all this with all this talk about the Fed cutting rates, the normal behavior of TLT when the Fed is cutting is for it to be rising. And so at some point, this will be a good trade. This also has very low IV options. So this will be good to play once it's shown its hand. But because right now we're just consolidating. Appears to be week. What is that? Week 14. So that's TLT. Let's move on to Bitcoin and crypto. So Bitcoin, my read here is, like this looked like it was a daily cycle low, and then we got this fake out, right? And now this would put us at day 65 approximately. And if you look at this really long move and then this sideways move and then this final move, that was 76 days. So who knows? Maybe this is going to build out more structure. It's going to be more in the 75-day range. Trying to get the absolute timing is that's not where you're going to get your edge. At this point, and this is your daily chart, we are set up for a little swing low. If this thing can hold, and then we can get a close above $110,810, right? You want to see something like this. You just want to be patient. Right now, I expect surprises to happen to the upside as we're in the 4-year cycle. And so this could very well be a daily cycle low here. But if you're going to play crypto, it is absolutely the case that Ethereum is the thing that you want to be playing. Ethereum is a network. ETH is the currency. But before I move to that, very simply, Bitcoin is in the same timing as the broader market, week 20. The catch with Bitcoin is we are actually already starting a little downtrend on the weekly chart. A couple of things here. So we made this all-time high 2 weeks ago, similar to QQQ and SPY, I think, as well. Right? You can see this ugly red shooter. What is the low of this candle? It's up 116,859. That's what this red line is, right? I mean, that's approximate. Look where we are here, below 110,000 as we're recording. That is a very clear line in the sand. We are below that level. We have started a downtrend on the weekly chart. I mean, you can see the following week, the following week after this red shooter, we close as a lower low. And then this week, we're making another lower low. Now, that puts us at week 20 and puts the top at week 18. It's entirely possible this thing bottoms on week 20. Like, this could be our bottom, right? I'm not saying that this is, but you have to be prepared for that. Again, surprises come to the upside. Surprises will come to the upside. That's what we're looking to trade, right? Now, entirely possible we have to go through a few more weeks of downdraft. If anything, that's actually good. That gives us more fuel to the upside, and a higher potential all-time high. But again, as I was saying before this, Ethereum is the thing to play. We are on month 33 of the long-term cycle. The last two cycles coincidentally topped out on month 35, both. I think I say coincidentally very deliberately. I don't think that's a thing that you want to try to time, but that's interesting, right? But I think what that tells you is call it some kind of range, right? We're on month 33 right now, and it looks like we're probably going through a weekly cycle decline. Now the question is, do we get our top on month 35 again this year, or does it stretch to month 37, month 38? Maybe this weekly cycle decline happening now is perfect. That helps us to stretch And so, we end up getting our high on month 38 or something like that, right? Like you can see this was the high on, and of course, this was an ugly, because like this was actually a double top of this high here. So this was month 35, but in reality, the top kind of sort of came several months before, right? So that's important, just kind of like zooming out. And when you so moving on to ETH, let's look at the ratio with ETH to Bitcoin first. Look at this long slumping period. This kind of looks like the ratio of IWM to SPY that we talked about, right? Like remember that, right? But look at this rebound, this V shape, right? Look at this period, right? Like I think we're going to see something more like this. I mean, not quite this magnitude. I mean, this is gigantic at the beginning of Ethereum, but I think it's going to be something like this, some kind of rebound. You want to be in ETH right now. Looking at the absolute chart for ETH, it's the same picture as Bitcoin and the markets. We're on week 20, except not like unlike Bitcoin, we are not at a weekly swing high, right? We made a high last week, not 2 weeks ago, and it was a bullish outside weekly candle. Let me zoom in so you can make sure you can see that. So you see the candle broke below the low of the previous week, and then it made a higher high above. And then we're just consolidating. This is this week's candle, and we just started the week, so there's a lot of trading to happen, right? This is all just kind of a little price discovery. That said, we are still kind of late in the weekly cycle, but I'm thinking bigger picture, zoom out to this monthly chart. This is just consolidation. Like, just imagine this like, you can see this like box, right? Where price has just been kind of contained in this box since 2021, right? We're going to break out of that box, right? It's going to look something like this, right? This thing is going to get into the 10,000 range, something like that. We're going to have violent pullbacks along the way, which will be great. That'll be opportunity. You want to take money off the table as we get through certain stage gates. As you see bearish signals, it's like, oh, this has been rallying for 20 weeks. Maybe I take some off the table. But you can see, and I'll also like looking at the ratio of Ethereum to SPY. Look at this period. This was the same period where ETH was like massively outperforming Bitcoin, and then we look at this period, and you can see we've just been consolidating. Even this move is just really early stage, right? Like we're gonna have another one of like these where ETH is gonna be the place to be. ETHU is a leverage play on it, a 2x, like ETF. And so the specific level, I'll just talk about what's the specific level for ETH. What are we looking at? If we look at this daily chart, I'll get rid of some of this stuff here. So we're trying to stage a little bottom here. So a low of 400, a low of 43.11, right? And this candle is green today. Again, another contrast. The Bitcoin candle is not green; it's still kind of red. There's a lot of buying strength here, so pretty clear. It's got to hold above 43.11. Line in the sand would be a higher low versus this low, etc. And that would potentially set up a case where this was your daily cycle low, right? Like you can imagine something like this. Yeah, that could work. Okay, yeah, so that's ETH. All right, let's move on to gold. So gold is just consolidating here, and that's actually good news, right? Like look at this weekly cycle where we're just kind of going sideways this whole time. It is appears to be week 15. So patience is needed here, is what I would say, and that goes for the gold complex. So silver, GDX, all of them, similar thing, just kind of consolidating. But we're in the later stages of the 8-year cycle, so I think we're going to see a big rally once we break out of this consolidation. Palladium is in daily cycle decline and also weekly cycle decline. Very clear, right? Like we're making lower lows, would have to break above 1140 at this point. Platinum doing the same thing. And this is a great example where you don't have to chase, right? You don't have to chase. You can see form the swing high, platinum did by breaking below 1400. Yeah, so as I said, just the example where you don't have to chase. At this point, it has to break above this cluster here, which essentially looks like a bear flag forming. That's platinum. All right, we're going to close out. We're going to look at natural gas and then finally uranium. All right, so natural gas continues to cascade lower. The weekly count, so the weekly count, we're on week 18, but we're trying to form a little green here. And if we look at the daily, right, yesterday's range is a high of $2.75 and a low of $2.69. So if we could break above $2.75, we are in business. That would give us a little swing low on the daily, and it potentially could mark a weekly cycle low as well. So that's natural gas. And finally, let's look at uranium. So CCJ as our proxy, it's on day 3, or actually, look, let's see. So we had a little swing low off of this candle from Thursday by breaking above $71.52. A nice little higher high yesterday. So we've got good momentum here as long as it stays above $74.65. I also really like UUUU. That would be my pick in this complex. Look at that thing. Oof, that is beautiful. We zoom out to the monthly chart. Look at this this enormous cluster of consolidation, and now we're breaking out. Man, you might imagine this is your next cluster we go for. You can see price kind of aggregated here a bit. That's call it $15. So we're gonna close out here. Thanks for watching.